Welcome, everyone, to the Solo 401k and IRA contribution deadline and process webinar at Directed IRA. We do these every month. You can go to directedira.com and on the Learn section, this is our amazing website here, and hit the webinar. Check any of the prior webinars we've done. They're all recorded, and we throw up the slides. This webinar, too, will be recorded, so you'll be able to get that on the Directed IRA website. Give us a couple days. Also, we'll put the materials up. Aaron and I have some slides we're going to be walking through today. So now this is a cool topic. It's an awesome time. I just funded my 2022 contributions myself yesterday. I love the new year. Why wait till the end? Get 2022 in. But we're also talking about 2021. There's time to still get 2021 contributions in for 401ks and IRAs. And we're going to walk through the deadlines, amounts, and processes to get those done.
And a few nuances. So again, put your questions over in the Q&A box, not in the chat box, and I'll be moderating those. We do have a few people from the law firm at KKOS. They're on as panelists. It'll get to some of your questions. And we also have some staff here at Directed IRA that will be answering some questions as well. And then at the conclusion, if you're ready to open an account or get started with the Solo K, you can head on over to directedira.com/solo-401k. You can check out all the great information there, get started, and we'd love to welcome you to the team.
Cool. All right. Well, we're going to be sharing slides, bouncing back and forth between slides and, our beautiful faces.
Hey,
here
we got a few people that commented on our awesome mugs.
Yeah, these are our mugs. You come to some events this year, our Self-Directed Summit, Crypto Tax Summit, by the way, January 29th. Go to cryptotaxsummit.com for any of you crypto geeks. First of its kind. It's going to be awesome. Also have the Self-Directed IRA Summits coming up this year. Mark will have his workshops. Mark Kohler, co-founder, CFO, he'll have his workshops in the fall. So but we'll be having these amazing mugs. We got Roth and Roll. We got Crypto and an IRA. Yes, Crypto and IRA. And we got Stay Calm and Self-Direct On.
All three good ones.
So you too can have a cool mug.
Oh, yes, you can attend the Crypto Tax Summit virtually. So absolutely.
Yep. Okay. All right, let's start walking through this. This is Attorney Matt, part of the presentation. I got to come out here. I joke every time I give this joke. This is not the fun Matt. This is Attorney Matt. He's the worst version of Matt, but he needs to be here every once in a while.
He makes a special guest appearance.
Yeah, he makes special guest appearance. He gets one slide. And I just want to say this is educational in nature, does not constitute an attorney-client relationship. Seek out your licensed advisors and professionals when conducting actual transactions. Okay, here's what we're going to cover today. Back to regular Matt. We're going to cover today. We're talking about, thanks. Yeah. We're going to talk about solo 401k contribution deadlines and myths. There's some misunderstandings people have out there on what you can and can't do, particularly for 2021. We're going to break those down. We're going to talk about IRA contribution limits and deadlines too for 2021 and 2022. We'll go over Roth IRA contribution income limits, which is critical to the topic following it, the backdoor Roth strategy. You may need to do the backdoor Roth if you have an income limit issue on regular Roth. And
you have to stay till the very end to catch that fun topic. So
yeah,
don't hop out. Don't hop off too early.
Don't bail. The backdoor Roth is still alive and well. The Build Back Better bill, which was going to close out the backdoor Roth, did not pass. It's not looking very popular anymore in Congress. We'll see what happens, but that's still alive and well for 2022. Then we're going to go over the Roth conversion deadline, which really for people right now, it's just really 2022, December 31st for 2022. So there's no way to, the short on that one, I'm just going to say that now is you can't do a 2021 Roth conversion anymore. This is the year 2022, that ship has sailed, but you can make new contributions, and that's an important distinction. Then we're going to go over, of course, some of these deadlines, what you can still do for 2021 contributions. Okay.
Put those questions over in the Q&A box, and I'll be moderating those and tee up some good ones. So put those on the Q&A box, not the chat box. Thank you much.
All right, and just a couple notes on some of our educational resources. There's my book, The Self-Directed IRA Handbook, which has a chapter on solo 401ks. It's got a chapter on crypto, chapter on real estate. You can get on this my website on the Amazon site. It's $20, but it's worth thousands. I was going to say millions, but that's not.
I would say it's priceless.
Hundreds, yeah. I do have one client who says it's on his nightstand next to him, when he goes to bed, and it's on top of the Bible. I thought that was a little weird, but I was like, Cool.
Just a little, just a little bit.
So
Maybe next to it. I don't know about on top of it.
I
Next
know,
to it,
I didn't know how to
like
take
next to
that.
it?
I didn't know what to do. I was like, okay.
Just take it as a form of flattery.
So both Mark and I both contribute to Entrepreneur. I'm also contributing on Cryptopedia, where I've got an article actually on using your IRA to buy crypto.
Mhm.
Gemini, of course, powers Cryptopedia and has been a big strategic partner for us with our crypto IRAs. Mark and I both do 2 podcasts, the Directed IRA podcast, the Main Street Business podcast. Make sure you're checking those out. And we have, like I mentioned earlier, just a moment ago, our Crypto Tax Summit coming up on January 29th. So, I mean, part of our mission, in our company is to educate our clients, because you're self-directed, you're captain of your own ship, you're deciding what to do and how to do it. We're just here to provide educational resources and the accounts and tools to make it happen. So we want to educate you the best we can.
And there's a lot of misinformation out there too.
No,
no. And we're always refuting that
on
as
the
well.
internet.
Yeah.
I mean, if it's on the internet, it's got to be right.
Well, I mean, from the checkbook IRA LLC to being illegal, and who knows, who knows what else misinformation is out there. So, but don't worry, we'll put the right stuff out there. We'll put the good stuff.
Okay, so let's jump in, and we're going to talk about contribution limits. Then we're going to talk about deadlines. Okay, so I want to get in limits and some nuance on those limits first. Then we'll hit deadlines. All right. Then I think we'll come back and take some Q&A.
Yeah, we'll
All
do
right.
that.
I can just see I'm going to hit contribution limits, and everybody's going to have deadline questions. That's next. We'll get there. All right, let me share this slide because it's actually very content rich, and you're going to want to grab this off the website after once we post it. So let's walk through solo 401k. I know there's a lot of you on right now that did a solo K in 2021. Maybe you just recently set it up, or you're in the process of setting it up. And you have a solo K you're trying to get in 2021 contributions for. Now the rule on that is, which is different than a regular 401k with employees and everything, but a solo K is different. The rule on that is contributions are due, employee and employer, on the company tax return deadline, plus extension. So if you're an S Corp, or a C Corp, heaven forbid, but you're an S Corp, let's say, many of you that do the solo K are, that's going to be March 15th, 2022 for your 2021 contributions. If you're a LLC, sole proprietorship, your company return deadline is April 15th, or maybe you're a partnership, you'll actually, I think on a partnership, you're going to be March 15th, actually. So, but let's say you're a sole prop. A lot of those, you guys are sole props doing solo Ks. You got until April 15th. Now, you can put a total of 58,000 in for 2021. Now that number got bumped up to 61,000 for 2022, but for 2021 contributions right now, you get a total of 58,000 in. Now, in order to get that much in, if you're doing the regular contribution schedule here of employee and employer, you need to make about 140,000 on your W-2 approximately, just on how the numbers calculate. Now, for those over 50, you get an extra 6,500 bucks. So you can put in 26,000 as an employee contribution, plus you get to put in the 38.5. So that's nice. Now here's the rules just on how the calculations work. Let's say you made 100 grand. Let's say you were an S corporation and you took a W-2 for $100,000. I'm just using $100,000 because I can do the math on it easy. Okay. Well, first I get to put in an employee contribution of up to 19,500. As long as you made 19.5, you can put in 19.5. I made 100 and I'm 40, I can put in 19.5. Okay, and that's employee, which you can elect to do Roth or traditional. Now remember, employee contributions for US Corp owners go on a W-2. Even the Roth contributions, I know you're not getting a deduction on the Roth contributions, but that still goes on your W-2. Well, the big problem right now for S Corp owners is you've got to be doing your contributions now, even though you technically have until March 15th for your employee contribution. It needs to be on your W-2. The W-2 is due February 1st, I believe, for 2021. So I got to do that now. Now it's possible you could say, I'm going to throw 19.5 on there and not put it until March 15th. But the easiest way would be just throw it on there, get it in now if you haven't already. And make sure your payroll provider, whoever's doing your W-2, knows this is coming along. All right. So just remember, on employee contributions, you made 100 grand, it's 19.5, presuming you're under 50 here. All right. And that could be Roth or traditional. Now, the employer part, also I got until March 15th. Let's stick with the S Corp owners here. If you're against sole prop, you got to April 15th. But you S Corp owners, the contribution for the employer part is 25% of whatever the W-2 is. So if you had 100,000 W-2, 25% of that is 25 grand, right? And you're going to throw that 25 grand in from the company. The company's going to put that into your solo K. That's the employer contribution. Now that contribution goes on the S corporation's tax return. There's a line on the 1120S tax return for employer contributions to retirement accounts. That's where you're going to drop that and you're going to expense it. The employer contribution always has to be traditional. You cannot do a Roth contribution on the employer contribution. You can do it as traditional and convert it next day to Roth, but it goes in always as traditional because the company's expensing it. You know what I mean? So it's going in. All right. So now I got 100,000. I did 19.5. It went on my W-2. I did 25,000 employer. So I got a total of crap. What is that? That is 19.5. It's basically 20 grand.
I wish I had your back, but I was looking at questions.
25,000. That's 44,500.
That is correct.
Okay. 44. Selling. Thank you.
Marina
tried to bail me out there. So
we appreciate you.
44.5. So up 100,000, you got to put 44,500 in your solo. Okay, that's pretty cool. And now remember, the employer contribution went on the company tax return. Okay, now let's say you extended your return. You're not ready in March 15th. So you get a 6-month extension. You really have until September 15th to actually get the money. So you could really kick the can down the road if you wanted, but you must have the solo K going. And remember, for US Corp owners right now, this is the critical message. You've got to be doing it now. Like in the next 10 days, really, you've got to get this dialed in. Make sure your payroll provider that does your W-2 knows what you're throwing in, even if it's Roth. I know we've had a lot of mistakes over the years. Clients just think, but the Roth, they don't get a deduction. So why would it need to be on my W-2? I don't know. The IRS just wants it on there. I'm sorry. It needs to be on there. Okay. Now we're going to circle back for questions. So I know there's probably some questions out there on this, but we're going to circle back for questions. Just give me a minute.
And we're hitting some live here too.
Okay.
I'm saving some good ones.
Okay. We got a crack team here on the web. I know, and they're answering questions. Some of the attorneys, some of the senior account reps. We got our best people on this. Okay.
It's like getting like a little free consult too. Like you hop on
really
some of this stuff.
Like webinars. I mean, you know, these are some legit people that know their stuff. So, okay, let's jump back to the chart though. Let's talk about Roth IRAs for a moment. You could be doing a solo K and a Roth IRA. Maybe you're just doing a Roth IRA. I don't know. But the contribution limit's $6 grand. That did not change for 2022 either. It's still just $6 grand. If you're 50 or older, you're going to throw in another 1,000. Here's what's important on the Roth IRA. This is the most important point I want to make. If you are a high income earner, and we talk about this all the time on the podcast, you know, Mark and I are talking about it. It's a lot on his YouTube channel. If you're a high income earner, you don't get to do a Roth IRA through what we call the front door. You don't get to do a regular Roth IRA. High income, and this is the 2022 number, is 129,000 single, 204 married. It's a little less for 2021 if you're still looking to do 2021 contributions, which again, you're going to have until April 15th, Derek. We'll come to that in a moment. But you high income earners, if you're over that limit, you are going to have to do what's called the backdoor Roth IRA, which we are about 5 slides away from. So hang tight. I don't mean to make you, hold out for the end here, but we're going to come back to those that are high income earners. Now, what about you that have kids? We have a lot of clients that want to do like the kids Roth or, and so how do I do a Roth for them? Well, they're going to be under the income limits probably, but they must have earned income. You can't just gift them the money or just throw the money in. So maybe they work in the family business. Maybe they got a summer job. Maybe they do babysitting, mow lawns. I don't care. They've got to have earned income. Now they can be below the standard deduction where they don't even need to file a tax return and still be okay. but they got to actually have some legitimate earned income that we can use to, that you're going to need. I mean, we don't really need it. Frankly, you need it to justify their contribution. So, but we do have a specific kids Roth IRA application at Directed for self-directed accounts that you can do all types of things. Or if you just want to do crypto, we have a kids Roth crypto account, which has been pretty popular. I think a lot of people have been like, dang, I'm gonna get my kid Roth account. I wish I had one of those 10 years ago.
Just put your info though, as the legal parent or guardian.
Yeah.
Not your kid's info, not the minor's info, your info.
Yeah, if you got like a 14-year-old, you know, I mean, you're going to be the authorized person on the account, the trader with respect to Gemini. So a little side note there. Okay, now traditional IRAs, it's really about whether you're going to take the deduction or not. So $6,000 a year, but there are some income rules. Now, if you don't have any retirement plans, nor does your spouse, these income rules don't really apply. But if you're covered by a 401k at your day job, or even maybe you got a solo K, or you know, which would count here, if you make over these certain income limits, which is 68 to 109 between single or married, you don't qualify to make a traditional IRA contribution that's deductible. Or if you have a spouse that's covered by a workplace like pension or 401k, if you married, you make more than 204,000, you can't contribute to a traditional, you cannot contribute to a traditional IRA and get a deduction. Now you could do a non-deductible contribution, which is going to come back here on the Backdoor Roth, but you can't make a traditional contribution that's deductible. So those are some of the income rules and nuances on how much you can get in and some of the income rules. Now the solo K, just so you know, there's no income, doesn't matter. You could make 10 million a year. The contribution stuff's all the same.
Which is awesome.
Which is awesome. Yeah.
Yeah, that's partly why we
also
love it.
making 10 million a year. That's awesome too. All right. Okay. All right. I said I would do the deadlines and then we'll do questions. So sorry, I may be talking about this longer than you wanted before questions. I'm still an attorney, I would say, but I actually worked as an attorney for a long time, so I learned how to make things take long. I bill by the hour. What do you expect?
We will not be going over the SEP IRA, by the way. So
I'll fill the SEP IRA.
I mean, we could fill it, but it is not the same as a solo 401k. There's some similarities, but
yeah, your SEP IRA, it's basically 25% of what you made or your W-2, self-employed. You don't get the 19.5, it's just 25. And the deadline is going to be March 15th if you're an S Corp, or April 15th if you're a sole proprietor. So you got some time still on SEP IRAs too. So good news.
Oh, you got a bonus answer on that one.
Yeah,
so.
I just figured
you're a giver.
Yeah.
You're a giver.
You know, we did have a request to have a webinar episode on SEPs. And if we did a webinar episode on SEPs, what do you think we'd call it? Let's talk about SEPs, baby. Let's talk about contributions.
And deadlines.
All right. That's Matthew Duffy, who also came up with Roth Enroll, by the way. We need to give that kid like a bonus.
Yeah.
Duffy's awesome. If you've worked with him in our office, he's at Directed IRA, but didn't he come up with Roth Enroll?
I did.
Oh, Aaron Halderman.
That's okay.
I thought, you know.
But he did Roth this way.
Let's give
He
you
did
something
Roth this
special,
way.
too.
He did
Roth this way. Okay. Well, anyways,
both good.
SEP IRAs are cool. Solo Ks are a little cooler. But just know the deadlines are the same in terms of company return deadline. So you don't have to have the SEP IRA. You can just, you can set them up. There's no plan like a solo K. The solo K has an actual plan you got to set up that the law firm KQS Lawyers does for our clients. But the SEP is just an account agreement that establishes the plan, and you still have time for 2021. That's the good news. Okay. Let's jump over to deadlines. I kind of hit these in some of the explanations and examples we gave, but just, little, I made a slide for us, so I'll talk about it again for a second. Okay. Remember, March 15th for S Corps, April 15th for sole props. Partnerships are probably March 15th too, actually. I might need to note that, but, and then remember the nuance for US Corp owners is you've got to act now because you got to get your W-2 done. Now there's an article too, if you're like, ooh, I need to send this to my accountant, or I want to read the detail on this. If you go to directira.com articles, just go to the learn section and articles. There's an updated article that goes through this process and a lot of these deadlines as well. April 15th, of course, for the Roth IRA and traditional IRAs. So you still got time for 2021. We always get an influx of contributions on IRAs up around the end of the year. I don't know why, because you have until April 15th. I think a lot of people are just forget and just think, I got to get in by the end of the year. You still got time. You got until April 15th. Okay. Let's come back to questions now.
All right, you want to do a rapid fire? Do a little rapid fire sesh.
Okay. All right.
All right, so I'm just going to go in order based on what I have here. Will you be covering using IRA and 401k to buy crypto? Or do we need to wait until the crypto tax summit on January 29th?
Oh, okay. Yes, we're going to cover that at the crypto tax summit, but we've probably done 2 webinars on that already. So if you go to directira.com/webinar, in fact, I'll just show you right here.
Yeah.
Oh, right here.
The answer is yes, you can do it. And there's a bunch of different ways you can. You can do it with the solo 401k, and we have that option to do it with us and our relationship with Gemini. If you want to do it as its own like institutional type account that's not with us, you can do it, but you probably have to wait several months because there's an approval process for that with, you'll be going through like Coinbase or Gemini or whatever. But there we go. Right, crypto investing with an IRA beyond the basics.
Yeah, so we did an intro one that's on the webinar page, directira.com/webinar. We also have this the Beyond the Basics one, so you can watch that prior webinar and the slides are there. We got all the deets, so go check it out.
Love it, love it. Okay, so let's see here. Is it say we'll come back to the backdoor Roth one. I have an S corp and I'm creating a solo 401k. What type of bank account do I need?
I have an S corp and creating a solo 401k. What type of bank account do I need? Okay, so with a solo K, you have a couple options. With us, you can do what's called a custodial account where we will have the account. And we separate those based on your traditional and Roth funds. So if you're doing traditional or Roth, we're gonna have an account with your traditional funds, or we're gonna have an account with your Roth funds in it. And those are 2 separate accounts. They're taxed differently. They're gonna have separate statements. You got to track the dollars separately. And you can just have what we call them custodial accounts here at Directed. Now, if you're like, nah, I want to do it myself. I don't want you to hold my money. Well, in a solo K, you could do that. In an IRA, you don't have a choice. IRAs have to have a custodian. You have to have us for your IRA. I mean, we're pretty great, so it's not that bad. But in the solo case, you could be like, nah, I don't want you guys. You can set up my solo K maybe, but I want to do it on my own.
Cool.
Because you can be the trustee of your own solo K. In an IRA, you have to have a bank crediting your trust company as trustee or a trust company. So let's say you got the solo K and you want to do your own checking account. Great. Just open up a bank account in the name of the solo 401k. Again, if you're doing Roth and traditional, you have 2 bank accounts. These are just bank checking accounts. What's important is you have to have an accounting of what the source of the funds. So you need to be able to show, oh, these are my Roth funds and I've invested this into this investment. Oh, these are my traditional funds and they're invested into that investment. And the profits are coming back into the right accounts. And so you have a proper accounting for that. So we want to have separate bank accounts for your Roth and traditional funds within your solo K. Let's say you have a spouse that contributes or participates in the solo K also. You're gonna have a separate bank checking account for them. Now there's a number of banks that provide these accounts for solo Ks that know what the heck it is. If you go into your local credit union or you call up your big bank and you're like, I need a checking account for my solo 401k, you're going to be there a while. All right. Like if you walked in, take a tent because like you're not going to get any help anytime soon.
I like that. Take a tent. Huh?
Take a tent.
Bring your tent.
Not that they'll let you stay overnight, but I don't know.
Like waiting out for a long rock concert.
Yeah. Yeah. You're going to wait outside.
Bring your lawn chair. Pull up a tent.
But Titan Bank is one, Solera Bank. There's a number of banks that actually have solo 401k checking accounts. They've gone after those types of customers. They know what they are. We have a resource directory on our site that gives you contacts there if you want them. They're pretty knowledgeable too on it. So just because they've had to work with a lot of clients doing those.
If you need info on the process or pricing, you just go to directedira.com/solo-401k.
So we have all the pricing, the next steps, on how to get started, comparing the solo 401k to an IRA, bunch of cool charts, articles, webinars. It's a very detailed page. It's one of the most visited website pages on our website. So ton of information there. You can go check out the pricing. I will say this, we're super competitive. We have excellent customer service. So if you're like, trying to shop pricing, we're right there. But really what sets us apart is our knowledge in the space with these types of accounts and our customer service, I'd say.
Yeah.
I think that'd be good.
We're pretty much killing on that.
We don't, there are like towards the end of the year, we do run specials, but quite frankly, like don't wait until then. If you're ready to get going, just get going. At this point, we're already so competitive and our pricing's so good. Like, don't wait around to like don't delay is what I'm saying. And at the end of the day, like maybe $50 is like all you're saving. It's like hardly anything. Like we're just so competitive now. It like, you're not going to get a couple $100.
Well, here, let me tell you, let me give you,
there you go.
I'll make it good for you. And who is ever asking for a discount right now? The discount was $50 in November to do a solo K. You can use discount code webinar 50
and get 50,
and you'll get $50 off. So it's the same thing. Which will, it's basically webinar 50. That's also at the end of the show here. Okay, any other questions before? I was going to go through like getting the money in the solo K, employee versus employee.
Okay, let's do that because there was a lot of questions on that. Let me hit this last one because this did come up a few different times on the 50, on the hitting age 50.
Okay.
So do I need to be 50 by April 2022 to get the additional contributions in when my birthday is in September? So I'll be 50 in September, but can I get my those contributions in?
Someone in the chat, please bail me out here. I do not know. I was going to guess, but I'm like, you know what? We got people who know in the chat on the team. So I'll leave it to one of them.
Dude, we had somebody open 9 accounts with us in the last 60 days. Thank you, Colin. He's like, they're so crazy on their game.
Okay, let me get to Tina's question. What about age if you're over 65? You're cool. I mean, you get Medicare or you get Medicare at 65 or that's when you get Medicare at 65. But
it is Medicare.
Yeah. Roth IRAs, no age limit. Okay, you could be 100 and still contributing to your Roth IRA if you have earned income. 72 though is an age issue for traditional IRAs because you have to start taking RMDs. So right now you're not allowed to contribute. Although there's pending laws to change that. Also, if you are in an employer plan and still working, you can contribute at any age. Caveat is solo Ks don't count for that though, because there's an exception to the exception. Even if it's an employer plan where you're working, if you are a 2% or more shareholder or an officer or director, that exception doesn't apply. So solo Ks, you will have an issue at 72 for new contributions. So
cool.
All right, let's go through process just because employee and employer is a little different here. So let me.
Oh, Katie answered the question.
Okay, what was the answer?
So here, I'm going to read it. So it's the year in which you turn 50. So for example, if you were 59, all of 2021, you can't do a catch-up contribution for that tax year. Since you're turning 50 in September of 2022, you can make the catch-up contribution for this tax year and every tax year moving forward. Thank you, Attorney Katie at KKOS Lawyers.
Awesome. Okay. That's good news. Get the money in. All right. Now here's just this diagram breaks down a couple of things. First, you're getting the money in 2 ways. You remember, you as the employee in your solo K are throwing money in. That's the max up to 19.5. And then the company is doing a match of 25% of what you made. So the company's throwing in the match into the solo K. Now, some clients will get confused. They'll be like, well, does that mean I need to personally cut a check into the solo K or I need to transfer the money from my personal account to the solo K? Not really. I mean, if you think of your 401k where you day job, let's say you work at Dunder Mifflin and you got the Dunder Mifflin 401k. You signed up with Toby in HR, you got enrolled, got it on your payroll. Toby got it right. Okay. When they're pulling money out, the company's throwing money in from the company's business account, obviously, but it's also coming off of your paycheck directly. And so you're not ever personally putting the money in. You can consider the same thing. If you want to just drop money from the company account into the solo K, and most solo K clients just do it as a lump sum.
Mhm.
I mean, you can do it as a monthly basis and throw money in, or maybe quarterly if that's how you do your payroll. But a lot of clients just do it as a lump sum to get it over with. And so in that instance, you just want to drop it from the company account and just know this is constituting 19.5 of an employee and whatever percent of your total wages you have for the year, or your self-employment for you sole props, which you get to do 20% instead of 25. But they can all come from the company account, or you could throw the employee in from your personal account. Then the employer would come from the business account because the business is going to expense it. So that's kind of the mechanics on it. If you were doing all traditional contributions, it'll just go into one traditional bank checking account and then you invest. If you're like, well, I'm going to do Roth here and I'm going to do traditional there, you're going to have two bank checking accounts in the solo K. Or if you're at directed, you'll have two custodial accounts for your Roth and traditional. Also, if you got spouses, that's for you, those in Utah, spouses, sorry. If you have a spouse, then they will have separate bank checking accounts if you're doing it on your own, or they'll have separate custodial accounts at directed.
So that was the answer to the banking account questions that y'all have.
Okay, hopefully that helped. I feel like that sounded confusing when I said it, but
Well, it was a good story. We got through it.
Okay.
That's the goal.
okay. Tell me what you're saying, Aaron. All right. He's like, that was a little boring. That's what I'm trying to say. Okay. Any other Q&A on contribution process? I want to talk about the solo K, still setting up a solo K for 2021. That's what I want to hit next. But
Anonymous attendee, do both contributions, employer and employee, have to be funded from a company-owned account, or could both be contributions funded from your owner's personal bank account?
well, the company contribution should come from the company bank account. Okay. The employee contribution could come from your personal account. That's totally cool. What I would do just to keep it clean for your bookkeeping is put the money from your personal account. It's just an owner contribution. Or when I don't get confused by contribution, but you're putting money into the business account from your personal account, and then the business account is going to make the contribution into the solo K. Now, let's say you've already done it. You're like, well, it was just in my personal account. I just threw the money in from my personal account. That was the company contribution and the employee contribution. That's okay. You're just going to have to make sure your accountant understands how that happened. And there's some bookkeeping done to clarify that. So it's expensed at the company level on your company return, and it's tracked on your W-2 for US Corp owners.
This is good just for some newer business owners, I'd say. Does the IRS consider 1099 income to be earned income?
Yes, absolutely. W-2 would be a 1099. Let's say you're driving Uber, or
Uber.
Whatever. I mean, I just say you got any self-employment, okay, you've got, and you're getting a 1099 for selling goods or providing services. That would constitute as earned income. Now, let's say you're just taking that on Schedule C on your personal tax return. All right, you're a sole proprietor. Okay, you don't have an S corp, you don't have a business entity. Just going on Schedule C. You're a sole prop, so you're going to take all your expenses against that. And now, if you have a loss, well, you don't have earned income anymore at the end of the day for purposes of a contribution for the solo K here. Now, it's possible you could kick out a W-2. Well, this is sole prop, but it's possible you can have a loss in an S corp and still issue yourself a W-2 to make a 401k contribution. But in a sole prop, if you have a loss on Schedule C, you're not going to be able to make a solo K contribution.
Cool. You want any other questions?
No, but I saw Tina's question just pop up. Does it have to be W-2 income or K1 income? On S corps, we're going off the W-2. You have to use that, unfortunately. The K1 doesn't matter. For S corps, it's your W-2 wage income. And I know that sucks because you want to bump down your W-2, right? You don't want to have a 140,000 W-2 to max it out. So that's okay. If you want all Roth dollars, there's possible ways to do a mega backdoor Roth and still do it with like maybe 60, 70,000 in on a W-2 and get almost all of that up to 58,000 in a solo K. So there's some other strategies if you're have a smaller W-2 than what you want and you still want to max out. If you're doing all Roth, the mega backdoor Roth can work. Again, Build Back Better could close that out, but that hasn't happened, so we should be good for now. So there's still some strategies out there. If you're like, ooh, I missed that. Mark and I have an episode on the mega backdoor Roth 401k on the Directed IRA podcast.
Strong podcast.
That was a good episode. So check that out. I think Mark's had done some recent videos on that too.
Oh man, we got a lot of questions in here.
Okay.
Whew, just a lot.
You want me to go? You want to find some and I'll talk about the. Okay.
Yeah.
All right. You curate the questions.
Yeah.
All right. Okay. I do want to just make a note on, is it too late to establish a solo K? No. A couple years back, maybe 3 or 4 years, and it's been a while, but you had to have the solo K set up by December 31st of 2021, or the year in question, if you wanted to make contributions for that year. The Secure Act, which was put into law a few years ago, and then this provision came into force a couple years back at least, that basically said the new deadline is the company return deadline. So what I mentioned earlier, if you're like, dang, I want to get a solo K for 2021, I'm an S Corp, can I do it? Yes. Move now though. Get it going now, get it set up, get your contribution in, get it on your W-2 because that's due here in a few weeks. And you still have time for a solo K for 2021 contributions.
Mm-hmm.
Now, let's say you're listening to this webinar and it's March already of 2022 and you're like, crap, I didn't get on my W-2. It's possible you could still throw in an employee contribution and amend your W-2, get with your account on that. Or you could just say, at least I'll throw in the employer contribution for 2021. I'll just throw that in. And I'm fine just at least throwing the employer contribution in for 2021. And of course, those of you that are sole props, you had until April 15th anyways for the employee and employer part. So you're good. You have some time to still get it set up and get your contributions in for 2021 contribution purposes.
What if your C Corp and your year end is not December 31st?
Okay. If you're a C Corp and your year end is not December 31st, I think you have C Corps are due on March 15th as well, I believe. So you're going to have, what is that? 2 months and 15 days after your year-end deadline, probably. But I don't know, check with your accountant. That question is one reason of many why we never like clients to have a different year-end than December 31st. All your deadlines change, and some deadlines are hard and fast and don't move off December 31st. Most of them do, but it's a pain in the ass remembering which ones. Hence, I don't know, but that's my guess. Sorry, that's not a great answer, but that's my final answer.
It was fair enough.
That's my final answer. Okay, other questions?
Yes. So I have a 401k, so it'd be an old employer 401k.
Okay.
And I have an IRA. Can I roll it over with you guys and get those funds into a solo K?
Yeah. Let's go here. Okay. So let's say you get the new solo K set up. We're on the diagram here. And you can roll over old employer 401k. Let's say you have a traditional IRA somewhere else that can roll into the solo K. Maybe you got a SEP IRA that could roll into the solo K. Those are all going to the traditional solo K account that you'll have in the solo K. Now, the one wrench of what you cannot roll in to a new solo K is Roth IRAs.
Bummer.
Roth IRAs are forever Roth IRAs. You will never move a Roth IRA into something else that is just not another Roth IRA. So can I go Roth IRA into a Roth solo 401k? No. Remember the rule. Roth IRAs are always Roth IRAs. So you cannot go into a Roth solo 401k. I've been in meetings like this is back in the Obama administration about this dumb rule. And everyone knows it's a dumb rule. It's just, there's a lot of dumb laws that don't get, no one gets time to change in Congress. And so it's just like not a huge priority. So now you can roll out, this is a common strategy. We will have clients, particularly that are older, that'll hit 72, let's say, and they have a solo K, and I've had to do this with lots of clients, is you have to start taking RMD on Roth 401k funds in a solo K. Roth IRAs, you don't have RMD, but Roth solo K funds, you have RMD when you hit 72, even though it's not taxable when you pull it out. It's just another weird quirky rule. So you can roll out of Roth 401k to Roth IRA. So you can go out Roth 401k to Roth IRA. You can't roll Roth IRA into Roth 401k. That's why I just like say Roth IRAs are always Roth IRAs. You're not going to get it into anything else. Once it's in Roth IRA, it's stuck.
All right, Bob, we're going to hook you up right now. So what constitutes having established a solo 401k? Having the documents completed for the solo K or the bank account created? I've started the process, but I'm still trying to find a bank that understands the type of bank account I need. So there's that banking account question. That is a good question.
Yeah. So the 401k is technically established when the plan is signed and adopted by the company. So for your business, I mean, you're signing it as the adopting employer. Again, think of Dunder Mifflin. When Michael Scott, he's only regional manager. What's the big guy's name? David.
Oh, yeah.
What is his last name? David something.
Yeah, dang it. Somebody put it in the chat.
Michael Scott is definitely, he's only regional manager. He's definitely not authorized to adopt the Dunder Mifflin 401k, but David something. David, it's there. David
Wallace.
David Wallace. Thank you.
Thank you, Brendan.
Brendan for the win. All right. Okay. David Wallace. Okay. So when he signs the solo K doc, the plan document, that's a legit IRS pre-approved 401k plan. That's what we have. KQS Lawyers has a 401k pre-approved plan with the IRS for solo Ks. When that's signed, that's when it's effective. Now there's a couple of steps that'll happen after that, but technically that's the effective date. One of them is, one of the effective dates is, the effective date is when it's signed. Sorry, I'm looking at the chat. Some of the stuff people are throwing in there.
You guys throw us off when you post stuff like
dang
that.
it.
You can't do that to us.
Okay. It's effective when signed by the authorized person. The second piece, though, is there's going to be an EIN for the 401k. That we can backdate that a little bit to say on the EIN that the plan was adopted on this date. Honestly, the IRS isn't too concerned on that, but we don't want to be getting the EIN too late. So, so it's really when signed. Now, when you get the bank account, and that's really about timing deadlines for contributions. The bank account, don't stress. It's more about when the plan is signed. That's when it's adopted.
Okay. Again, a lot of the banks don't understand, what type of account or what you're trying to do. So that's why I have a few that recommend out there that's on our resources page. You can go to titanbank.com or solarabank.com. They have those specific accounts like pretty much on their homepage.
Yeah.
Like you can go, you need a solo 401k bank account, click here.
Yeah.
Like, so just go do that. And they're web-based. So you're not walking into the branch. They got it all set up. You can do it in like 5-10 minutes and just, they know what to do. If you like trying to go to your, local Chase Bank rep and get that done, you may have your work cut out for you.
Yeah, and if you did your solo K here, KQS Lawyers, I mean, we have those resources in the contacts there. So just hit them up. We'll connect you.
Cool.
Comerica Bank's another one that's a national bank that's done the solo K bank accounts and has a little division for it. So, okay.
You want to hit the back door? Did that just come out wrong?
Okay.
Like poor form.
Okay, let's talk about
It's not what you think.
Let's talk about the backdoor Roth IRA. All right. You're like worse than Mark. Man, you're killing me. Okay, let's talk about the backdoor Roth IRA. So now this is as easy as 1, 2, 3. And let me say this first. The backdoor Roth is actually a pretty complicated tax strategy. But if you get it in the right process and you know what you're doing, it's not that hard. So there's 3 key pieces here though that you got to get right. And let me say this, before I get into it. A directed IRA, we have a backdoor Roth IRA app for self-directed accounts and a backdoor Roth IRA for crypto, if you're just doing crypto only. We have a unique account app that does this all in one for you. I was doing the backdoor Roth before we had directed IRA, and it was a nightmare. The providers I was using to do this, because you had to do it separate and you had to figure it out. No one knew what the heck it was. So here's the 3 steps. Now remember, you're gonna do the backdoor Roth IRA if you're high income. All right. If you're making less than 100 grand a year, just do the regular Roth IRA. All right. But the backdoor Roth is for people who are high income. Now, remember on the earlier slides about the contribution limits, on traditional IRAs, I lose my deduction if I'm high income also. If I have, I have a 401k at a day job or a spouse does, I can phase out and not get a deduction. Cool. We're doing a non-deductible traditional IRA contribution. So you'll need a traditional IRA account. You're not going to use it except to make a contribution and convert out of it, but you have to have it set up to make this non-deductible traditional contribution. You can do 6,000 a year. So you have a lot of clients that are doing their 2022 right now because they were waiting for January 1st to hit so they can throw in their 6 grand for 2022 because they want to go put it in a deal or invest it. So you can throw in 6 grand right now. Now, let's say you haven't done this at all. You didn't do this in 2021 and now it's 2022. Great. Do 6 grand for 2021 and do 6 grand for 2022. Do 2 contributions, get 12 grand in right now. You got a spouse you want to do this for? Boom, 12 grand for them. One of your kids got some earned income you want to do? You could do 2 years of contributions right now. So step 1 is we get the traditional and we make the non-deductible contribution. You are not taking a tax deduction for this, okay? Step 2 is we're going to establish a Roth. You're going to get a Roth IRA. This is ready to receive this because we're going to convert here in the next step. But we need a Roth account to receive the conversion. Now there's a major caveat here. If you have existing traditional IRA dollars or even SEP IRA dollars, you have to convert those first before you can do the backdoor Roth.
To repeat that one more time.
If you have, if you have traditional IRA dollars or a SEP IRA, you must convert those regular traditional IRA dollars first before you can do this backdoor. There's an ordering rule that the IRS has on Roth conversions that says you must convert your deductible traditional IRA dollars, which are just your regular traditional IRA dollars.
It's a bummer, but.
So some clients be like, well, crap, man, I got an old 401k, I rolled to an IRA and I'm self-directed with you guys. It's got 300,000 in it. I don't want to convert that whole thing. You're going to be stuck. I'm sorry. So one unique thing is though, traditional 401ks, including your solo 401ks, you don't have to. Those are separate. You can leave traditional 401k dollars. You don't need to convert those. Those have a separate rule in terms of Roth conversion ordering. So, but traditional IRA dollars must be converted first. Okay.
You can always chunk too.
Yeah.
You can always chunk them.
Yeah.
So do it, a bit at a time, over a period of a number of years.
Yes. Yeah. And eventually get rid of your traditional IRA and be all Roth and then start doing the backdoor Roth. So, but let's say you didn't have traditional IRA dollars, you're good. Then you can do the backdoor Roth. And what we're going to do is now we're going to convert that 6 grand you put in, or 12 if you did 2 years worth of contributions, which you can do right now. You can do 2021 still, and we can do 2022 because it's January now, 2022. So I'm going to convert that. Let's say it was 6,000. Okay. Well, I'm going to convert that 6,000, and now that's going to go into my Roth account. So I got 0 in my traditional, and I got 6,000 in my Roth. Well, do I pay tax on that conversion? Is there any tax due on the conversion? No. It was non-deductible. So when you convert non-deductible dollars to Roth, there's no tax due. Now you will get a 1099 though from us or anyone else. You're still going to get a 1099 for a Roth conversion. But what you're going to do is you're going to pick it up on your 1040. It's form 8606. And you're basically going to say, this is a non-deductible. I did not take a deduction on this 6,000 I threw in. It's non-deductible. Therefore, there's no tax on the conversion. So you'll effectively pick up the 1099 and then put 0 as the taxable amount. So it does take a little work on your 1040. There is a couple boxes you're going to need to fill out, which you got to do the 8606 on any Roth conversion anyways. But this is non-taxable, which is the cool thing. You didn't get a tax deduction, so there shouldn't be any tax on the conversion. Oh, so
Chris.
that's it. We got a whole podcast episode on this. If you're like, ooh, I need more on that backdoor Roth, Matt, you didn't.
Hit the learn section. Go get the podcasts.
Yeah, we got a couple podcast episodes.
All right, Chris, you got a few good questions. You're a repeat offender for asking questions in here, but they're all good. I will say that. So can that traditional IRA account stay around and you can use the same traditional account yearly to backdoor it until Congress lets us?
Yes.
As a side comment. Okay.
Yeah. So and in fact, on our account form, we have an option there. And this is what I do. I do this too.
It's awesome.
It says, keep this open. Don't close out my traditional, keep it open because I'm going to do this next year. Now it's $100 a year. We don't charge you the full account fee because you're not going to be investing on it, but it is still $100 a year because we got to do the tax reporting on it and do a 54.
That's so cheap. $100.
Yeah, but it's $100 and we leave it open so you can throw the money in for next year for let's say your 2023 backdoor Roth. So, but if you're like, nah, this is only a year I'm doing it, you can check the box and we just close it out. And that way you'll skip the $100 annual fee.
Okay, so we got a couple bill questions on the Build Back Better. So let's hit some of those. So is it safe to do a backdoor Roth this year? I'm in fear that it might be retroactively disallowed once the bill is finally approved. I mean, that's a good question.
Yeah.
You know,
I think you'll be okay to do it, but you can't be 100% certain.
Yeah.
So generally what they've done, and this was even happening in the House Ways and Means Committee bill, and as it went through different iterations, when they were doing certain things, they kept moving the deadline as months would pass, the next draft would come out. They'd move stuff to when they thought the new bill would go into law. So, so if you're doing the backdoor Roth for 2021 contributions, I'm like 99% certain you're going to be fine. If you're doing the backdoor Roth for 2022 contributions, I'm like 70% sure you're going to be okay.
And so you're saying there's a chance.
Yeah, it's more than just a chance, you know. So I think you're going to be okay, but this would take two things. One, Build Back Better passes. Two, the Roth IRA provisions are in, and I should say actually three things. Generally what they're going to do is if Build Back Better passes with the retirement provisions, they're going to make stuff effective for 2023. We're already into 2022. People are already doing their planning. It's already, you know, people are making contributions and doing things. And so they usually like to run stuff for 12/31.
All right, Ryan, as a future customer I like that, as a future customer with you on a solo K directed IRA.
We love that.
What's the process for converting the traditional employer contribution to Roth? Is it a phone call, an email with you? Do we do it on some portal of yours? Okay, all great suggestions.
You have to have a written election to convert to Roth.
Yeah,
that's a legal requirement. We have a form.
And we're happy to help with that. You can just head over to directedira.com. In the upper right-hand corner, you can hit schedule new account call, and we have a couple solo 401k specialists. Now, that's to get things going at Directed IRA, and we'll facilitate the plan documents with KQS lawyers. If you need some tax or legal advice peppered in there nicely, then you'll want to schedule a consult over at KQS lawyers, and we can, you know, look at that on that side.
Yeah,
Okay.
and then when you actually do that Roth conversion of traditional dollars, it's just a form at Directed IRA, but we have them e-sign, it's easy. But the IRS requires a written election to convert to Roth.
I like your pre-framing though, Ryan. If everybody pre-framed like you did, we might get to everyone's questions. Like future customer at Directed, like
I love that.
you know, you did good. Okay, let's see. I thought IRA contributions were not deductible. I don't understand the non-deductible IRA contribution for high income earners.
Okay, so when you contribute to a traditional IRA, you get a deduction. That's deductible. So I put 6,000 in my traditional IRA, the normal person, they're taking a tax deduction on that, right? Okay, so like, and if you did that, and let's just say let's not even talk about backdoor Roth. Let's just say you did a traditional IRA contribution, you put in $6,000. And then let's say 3 months later, you're like, yeah, I wish I did a Roth. I'm going to do a Roth IRA. I'm just going to convert that 6 to Roth. Well, you took a deduction and you're going to take a deduction on your tax return for $6,000, and then you converted it to Roth and you pay tax on the 6,000. Cool. I mean, so what we're saying though on the backdoor is, because you're high income, when you put 6,000 in a traditional IRA, you don't get a deduction. You phase out. Or maybe you phase out because you participate in an employer plan or something. Frankly, it doesn't matter in the backdoor process. But when you convert it, there's no tax due because you didn't take a deduction. It's the same tax outcome at the end of the day. But the backdoor is a high income earner strategy, which you're typically phasing out, and you're not able to take a deduction on the traditional contribution, so it's non-deductible. But you can still do 6,000 of that a year, even if it's non-deductible. And when you convert it to Roth, you don't have to pay tax on it because you didn't take a deduction. Does that make sense?
Man, we answered almost 100 questions and we still have 100 open. So here's what I'll say. We'll do some more rapid fire here. If you have additional questions and want to get started with
I did see a question pop up there.
Then head on over to Directed IRA, do the schedule new account call. If you have, again, tax legal stuff, we can help facilitate that over at KQS Lawyers. So we got you covered if we don't get to your question, and that's free. You can hop on with us for 15 minutes and we'll go through some of the nuances of kind of the do's and don'ts and best practices, and we'll hook you up. All right, you saw a question you wanted to hit?
Yeah, so just keep in mind, if you have traditional IRA dollars and you're like, I want to convert to Roth, that's just a regular Roth conversion.
Yeah.
And so that's really common. And let's say you got 50 grand in a traditional IRA and you're like, I want to go to Roth. I'm going to make a great investment that's going to turn into 150 grand. Cool. Let's convert that at 50,000 now to Roth and then go invest it into that great deal. So, or just for the long haul, you just want Roth and tax-free on the way out. We love that. So that's just a regular Roth conversion. And if you got a $200,000 traditional account, you want to convert 100,000 to go to Roth, cool, just convert a piece of it. The backdoor Roth and this non-deductible thing, and you're high income, you're throwing 6 in a year, this is where it gets quirky. And you have traditional dollars, you got to convert it. Okay, that's just where it's a little unique. But just the regular Roth conversions aren't too complicated. Convert whatever piece you want. You can do a partial conversion. Don't need to convert your whole traditional account. Or we have clients that come to us and are like, hey, I got a traditional IRA over at TD Ameritrade, but when I come over to you guys, I just want to do a Roth. Cool. We have what's called a Roth Conversion app. It sets up a traditional account and a Roth account at the same time. We receive your transfer over from TD and your traditional, and we automatically convert it and throw it into a Roth for you. So you could do that too. And you could leave a piece over at TD and traditional to go buy boring stocks, bonds, and mutual funds, and do fun stuff over here at Directed IRA with your self-directed account, the cool stuff you want to do.
I will say this. I want to thank the staff over at Directed IRA, Solana, Grady, Jay, Jeff. We got a bunch of you answered just a ton of questions, and also some of the attorneys at KQS Lawyers, Katie, Stephanie, thank you so much. Really appreciate that. And everyone that participated with your excellent questions. So we'll spend another couple minutes going through some questions. We'll throw a promo slide up there so they can get you $50 off establishing the plan, and we'll hook you up there. Can a solo 401k be established when a SEP IRA or simple exists?
Geez, good question. Yes, but how much can you contribute is another question. So yes, you could have multiple plans, but a simple, I probably wouldn't be doing a solo K if you have a simple, because you're generally doing a simple if you have employees. I don't know anyone that does a simple IRA doesn't have that unless you have employees. And if you have employees, the solo K is not going to work. So I don't get those two together. But the SEP and the solo, I could see that. Most people who do a SEP and do a solo, they basically have the SEP and they're going to shut that down and just roll all the SEP IRA funds into the solo, which would be common. But technically you could have them both. You just can't double contribute. You can't like, ooh, I threw 58,000 in my SEP and I threw 58,000 in my solo this year. No, you can't do that. You can have them both. You just can't double up the contributions to double max out.
Okay, so do I have time to set up and contribute still for a solo 401k for 2021?
Yes, you can. The time is ticking though.
How
Are you
much
an
time
S corp?
how much time do I got?
If you're an S corp, you got like tomorrow. Start your stuff tomorrow because you got to get it set up. You got to get the contribution in and let your payroll provider. Well, you got to let your payroll provider know on your W-2 here, before the end of January. And they're not going to love you if you come to them on the last day. So just communicate with your payroll provider if you're last minute with an S corp. Now, if you're a sole prop, you don't need to rush it as much. Take your time, get it set up, get it ready, get it done. But you S corp owners trying to get employee contributions still in for 2021, get moving.
Get to getting. I have an S corp. Can I pay my child out of the S corp? Do I have to open a separate company of a different kind to be able to contribute to my child's Roth? Thank you.
What was that?
So I have an S corp.
Yeah.
Can I pay my child out of that S corp?
Okay.
Or do I have to open a separate company of a different kind to be able to contribute to my child's Roth?
Okay. All right. A couple different tax rules at play there. First, your kid just has to have earned income. So you could pay your kid from your S corp. You could, I wouldn't, but you could. You could pay your kid from a separate business. As long as they have earned income, they can contribute to the Roth. Whether they get a 1099, they get a W-2, they don't get a W-2 and they have earned income, okay, they can contribute to it. So they don't have a W-2, but they do have earned income, they can still contribute to the Roth IRA. But we don't like paying kids from an S corp. Okay, we generally, if you're paying your kids, we're typically going to set up a family management company. The S corp is going to pay the family management company and take an expense. The family management company picks up income and the family management company pays the kids. The reason we do that is kids that are employed in a family business, could be a family management company that provides support to your S corp. That's basically a sole proprietorship typically. They don't have to do withholding and pay into Medicare and Social Security. You get an exemption out of
Big
that.
deal.
Yeah.
It's a big freaking deal.
So now they have to be under age 18 for that and actually work in the business, and it's legit, but that's the best way to do it. Again, that's a Main Street Business podcast.
Great strategy.
Yeah, we have a lot of strategies on paying your kids over at Main Street Business Podcast, Mark's YouTube channel too. His book, Tax and Legal Playbook, has a chapter on paying your kids. Check that out. But either way technically works, because sometimes we'll have clients that 1099 their kids out of their S corp when they're like in college, because once they're over 18, it doesn't matter. So they'll just start 1099ing them once they're over 18, and then the kid will have earned income from the 1099, which they can use. They usually don't have much expenses, so they're gonna have earned income and net income at the end of the day. So they'll have income that they can make contributions into a Roth IRA. But under 18, don't pay them directly from the S corp. That's more just a way to get out of the self-employment taxes, Medicare, Social Security.
Steve, this is good. The individual 401k plan from like my E-Trade, Fidelity, et cetera, is totally free. But all solo 401k plans, they have setup fees and an annual compliance fee or custodial fee.
Yeah.
Why?
That's like the restaurant that says it's free to sit here, but you have to eat our food. Okay.
That's a good example. That's a good analogy.
Yeah. I think so. I just came up with that one.
No, did you?
So yeah. So when you have the 401k, the solo 401, that's a new one.
I like
we'll
that
see how
one a
that
lot.
goes. We might use it. So if you have a solo K at E-Trade or TD Ameritrade or Fidelity, they'll set them up for free, but you got to buy all your stuff from them. Okay. All the investments have to go through them. They're making money on the investment side. They're not making money by charging you account fees. But what do they let you buy? The stuff they can make money on: stocks, bonds, and mutual.
And that's it. That's all you can do.
Hey, Fidelity, I want to buy, real estate. I want to invest in an LLC. I want to buy crypto. Well, you can't do that over here. But I have a solo K, and you can own that stuff on a solo K. Not with ours, you can't. Okay, so that's the problem. But if you're like, guys, that's all I want to do, cool, go there. I mean, most of the clients that are using us are self-directing, or they're planning to self-direct. Some clients come over and they just throw their contributions in. Maybe you can add a brokerage account over here, and they're just kind of in wait till they find a self-directed deal. That's fine. But over here, we don't make money when you make investments. We're kind of like the place where you pay to sit, but you can eat whatever you want, bring your own food, buy from other people. We don't care. You can do whatever you want, but we make money by charging you account fees, not by making money on your investments.
Yep.
So,
All right, we'll just take a couple more.
but let me say this.
Yeah, go ahead.
One thing we do too is if you have like a solo K already and you're like, guys, I don't want to do that anymore. We can keep that same plan.
Oh,
We
yeah,
just
yeah, yeah.
restate it to our documents.
Yeah.
Because our solo K document is open form. You can have a Roth account, you can convert whenever you want, you can own crypto, you can own real estate, you can invest in LLCs. It's a
Very good point.
it's open architecture really to let you do whatever you want. So, but you can still keep the same 401k plan name and EIN if you have one. We just
Bank account.
yeah, we restate it to our docs.
Just totally cool. Huge benefit. All right, we'll just do a couple more and then we'll wrap it up. We really appreciate. Oh, thanks, Chris. He restated with us. So
There you go.
there you go. What if your employer doesn't offer any 401k? Can you start a solo K through your LLC?
Your employer doesn't offer a 401k. Can you start a solo K through your LLC? Absolutely. Even if your 401k even if your employer
The side
offers a
hustle.
401k, you can definitely establish a solo K through your LLC. Now that LLC must be a business. This could be your side hustle, but it's a legit business. It has income. It's not just a rental property or something.
Could be a DoorDash food delivery.
Yeah.
You know, that's
Yeah.
legit.
Yeah, whatever it is, you have a side hustle, small business, LLC, S corp, even sole proprietorship. Even if you got a day job with a 401k that you even contribute to, you can still do the solo K.
Mhm. Yeah, a lot of you asking about, well, I want to be a day trader, Forex trader, a stock trader. Can I do that?
Yeah. Now here's another thing we do. You can set up our solo K and you could be ready to self-direct, but you can also just take our plan doc and you can go to a Fidelity or a TD Ameritrade somewhere and just open up a trading account under the 401k.
That's a big deal.
Yeah, so you could, that way it gives you all options. So those are called investment only accounts. And so you're opening an investment only brokerage account. And there's some special places. If you just go to Fidelity or TD, it might take you all to find it, but there's actually special places we can send you.
They're
for
probably
those.
the easiest.
Yeah,
you
we've
know.
had lots of clients use them. They're just like, I want to send someone over there and just, be in the market. Cool.
Oh, we didn't hit on this. It's interesting. Taking a loan for my 401k. Can I do it? How does that work?
Yes, you can. Yes, you can do that. You can take a loan from your, from your 401k. 50,000 is the max, or half the balance, whichever is less. So if you got a 200,000 401k, you can take 50 grand. You got an 80,000 401k, you can take 40 grand, half the balance, not to exceed 50 grand. So that's the rule. There's some process. It's a 5-year term of repayment.
Interest.
You have to pay interest on it, which is prime plus 2%, and you make quarterly payments. But we have a separate solo K webinar that goes over the solo K more in general, which goes over the loan.
And
So
you love it.
check out the solo K webinar. We get into the loan.
Oh, should we throw
process
up that page for the promo?
Oh,
Webinar
yeah.
50. Let's do that.
Yeah, let me do that.
Okay, yeah, Brad, you're right. Fidelity calls that type of account a non-prototype.
There you go.
So we can.
I got saved a couple
Yeah.
times today.
And we appreciate that. We appreciate that. That means you're really.
I
on
think
it, paying
Katie bailed me
attention.
out. Brendan bailed me out
Yeah,
on
Marina.
David Wallace.
Yeah, we had-
Well,
you got our backs, and we feel that. We appreciate.
who was that? Chris that bailed me out on the prototype.
Yeah.
So here's the solo K page.
That was Brad.
Brad. All right, here's the code if you want to use to get $50 off a new account right now. So use webinar 50. And remember, this is going to be recorded. So you can get over to directedira.com/webinar. It's through the Learn link. If you go to the Learn link, you can find all prior webinars. You'll be able to find this one recorded, and we'll throw up the slides as well. We'll have another webinar next month. We do these every month. Make sure you're signed up for the newsletter. If you're a client, you're already signed up. If you have an account at Directed, if not, just sign up on the website. Go to directedira.com. You can sign up for our newsletter, get in the know on what's going on. You'll be notified of upcoming webinars. We throw in some awesome articles and let you know of the events and stuff we have going on as well.
This is a dang good webinar. I was feeling good about it.
I had a good
You
time.
feeling good about it?
I had a good time.
So here, let's end on this, because a lot of people want to refer business to us. Like they're like
Okay.
chatting that to
Yeah.
us, which is totally cool. We appreciate that.
Yeah.
So do we have like a referral program? Yes, we do. It's called Refer a Friend. So it's
Actually on our website.
Yeah, yeah.
It's under the start here. It says refer a friend.
So, and it's totally cool. We'll give you a $50 credit on your account at Directed IRA, up to 6 referrals. So you could send us 6 and have your account and your annual account fees paid for the year. Then when you exceed that, we just give you $50 Amazon gift cards. So, and it's totally cool. And here's the best part. We'll actually send people a copy of the #1 book in the space, the Self-Directed IRA Handbook, authored by yours truly, Matt Sorensen. So we'll send them a copy of that, and we'll give them a call to make sure they got it and answer any questions they have. And so you just go there, fill out that nifty little form. That's how we track it, and we'll hook you up. So awesome. Well, we really appreciate you attending. Again, if you have other questions that we didn't get to, we answered 100. We still have 100, it looks like. Just schedule a new account call, go to directedira.com, hit that up. Pick one of our solo 401k specialists if that's the account you're interested in. If not, go, select one of our other specialists if you want to do a crypto IRA or just open up a kids minor Roth IRA, whatever it is.
Like backdoor Roth.
Yeah.
Whatever you need.
Well, yeah, we'll take care of it. So we'll see you next month. And other than that, I guess peace out.
Yeah.
I guess we're good. We'll call it a day.
Yeah. Stay calm, self-direct on.
Thanks, everyone.